Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for 𝗧𝗶𝗱𝗲. Today is October 14th. We're halfway done with October. Where did it go? Let's get it back. I guess we can't. Oh, well, let's move on. So, yesterday we had the Consumers Price Index that talked about whether there's inflation on a consumer basis. Consensus was 0.3. We were actually at 0.4. Year over year, 5.4. So we are moving a little bit higher, but we're within range. There's nothing really here that's suspicious or not priced into the market. As you can see here, the range was 5.3 to 5.9. We came at 5.4. Here, the range was 1.3 to 0.5. Folks, it's still early here. It's only about 7:21 in the morning. So give me a break if I'm making a little mistakes. It takes a little time for my mouth to start working in the morning, at least as fast as it's used to working. All right, so consumer price data was not anything off the charts, nothing crazy. We're moving in the right direction, a little higher, but nothing crazy. Today we have Producers Price Index. That's coming out in about an hour and 9 minutes. And again, as you can see here, month on month, we're looking at a 5% increase. Year over year, 8.7% increase. Anything within the range of 0.4 to 0.9 would be okay. And I guess these numbers are fairly tight. So these expectations are not based on some wishy-washy hopes. So again, 8.7, 0.5. If producers are on track and if consumers, which were sort of on track, we should be okay. It shouldn't impact the market because these prices are baked into the market. Speaking of the market is up quite a bit. As you can see here, the Dow Jones is up 200 points pre-open. That's not random. Anything above 75, 85 points is not random. The Nasdaq is going crazy, and even the S&P is going nuts. Where are we? We're still in the twilight zone. We're still not above the 50-day moving average. But we're heading in that direction, and the highs are going higher. And the lows are getting higher as well. If you look at the Russell 2000, which right here I'll show you, we're actually above the 50-day moving average. The all-time high is 229. We're already at 224. And in case you're curious why small caps are holding up better during this corrective period, it's because there's less interest rate sensitivity to small cap stocks. This is the number of stocks in the index, in the S&P 500 trading above the 50-day moving average. Only 36% are trading above the 50-day moving average. Price is actually above momentum these days. It was the opposite way going down. On the small caps, 54%. So 54% on the small caps are trading above the 50-day moving average. On the S&P, only 36. But there's a reason for that. Investors are moving to smaller caps because they don't have that interest rate sensitivity. I wanted you guys to understand that. So bond market, we're still moving higher. We're above the 200-day moving average. We're long bonds. We're probably going to hold it another few days. I'm hoping that it'll get to the 50-day moving average. We had a drawdown of like 70% over here. Now we're like, I think down 3 or up 3. I don't remember, like random movement. But we're moving back up on the bond market. And I think the Fed overshot it. I think when they said they're going to take action, I think the price just overshadowed. And I think ultimately we belong right here at the 50-day moving average, maybe a little higher. And then I'm going to start selling bonds again. Put to call ratio, look at that. We are stretched out. Remember when I was showing you that rubber band example and showing you how we were stretched out to the upside? Well, we're now stretched to the downside. It's the opposite of what we were seeing right here. And the market is telling us it wants to go higher. It's a rubber band that's stretched out. Anything above 1 is oversold. And I mean, look at this. We are still in the oversold territory and need to go higher. As I mentioned or might have mentioned, or if I haven't, then I'm mentioning it now. VIX volatility is below the 20 threshold, which is fear level, where we're actually going down. As you can see here, we topped out 20th of last month, and we've been going down ever since, and the market is taking on a bullish bias. As far as the reports this week, as I mentioned, we have PPI, we have jobless data. Jobless data has been going a little higher. Anything in the 300s is good. Honestly, let's look at what the average is. I bet you it's right at the 300s. Yeah, there we go, 344. Anything in this range, and I'm going to tell you, even if we're like 360, 370, anything in the 300s, it's good because we've been in that level for quite some time. And I mean, little fluctuations are expected. The big reports for the week, folks, is going to be retail sales and consumer sentiment and import and export prices. Import-export prices aren't going to be as bad because we'll have the PPI and the CPI, but consumer sentiment is not going to be as effective because it's after retail sales. And I think that's the dumbest thing ever. They should put consumer sentiment before, the day before retail sales, because retail sales and consumer sentiment reflect on the same thing. 3/4 of the economy is retail sales. So this is a very, 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 very important report. And if sales slow down a little bit, if they're low, then the Fed has a good case for keeping the putting money into the bond market. If retail sales are really, really solid, then they could say, well, we have inflation and prices are running too high. The inflation is not transitory, and then they could start taking action. But I think the numbers are going to be a little bit below what they're expecting because of the supply chain bottlenecks. In terms of global economy, this is China. China data said that producers' price inflation was at a record high in September. We already know that. We know that inflation is running high internationally. I mean, especially with all these bottlenecks and stuff. I'm talking about China right now. Concerns about inflation and how price pressures might affect central bank policy, consumer spending, and corporate profits remain key focus for investors, and economists have been trimming economic growth estimate in response. That's actually a little bit true. The truth is most earnings revisions, as far as earnings revisions, they're actually better than expected from August till October. I was going through that the other day. The only two sectors I think that are negative are consumer staples and utilities, actually. Surge in producers' price inflation, which rose 10% from a year earlier. Man, oh man. In September from 9.5 in August, 10%. That's huge. Much of the increase was due to surgical coal prices. Folks, surging, not surgical, surging coal prices. China, they don't have a big coal supply right now. They're going to run out of heat, which appears to have not fed into consumer prices, even as part of the country contend with power shortages, which is why they're rolling their energy in and out. They are struggling with coal, and winter is right around the corner, which is one of the reasons why energy prices have been going high so much. Investors will get an update on consumer spending on Friday when the Commerce reports on retail sales for September. And that's why I say that seeing retail sales and then consumer sentiment is odd. They should put consumer sentiment the day before, 2 days before, so people have a good idea of how retail sales will look, because this reflects on this. But are they going to listen to me? Of course they're not. So again, that's where we're standing right now. The big reports are going to be tomorrow, not next week, next 24 hours. Keep an eye on them. Now, I know what today is. Today is Thursday, where I give you my top ETF and an option to go with it, right? A deal's a deal. So let's go to my stock fetcher. Let's go to my top ETFs. Top ETF on my CSI scan, energy. Top scan under 1 month, energy, 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 and energy. Let's go to the energy market. Let's see where we are. So the energy market looks like it's building a base here. All right. Now, I believe the energy prices are going to go higher, and I think they're just getting out of whack right now. So my suggestion, and again, this is a trade. I'm just giving you guys this trade in the morning. This is a long-term position. What I suggest is, I suggest you guys go to 121. 121. We're at 56 right now. The options are not expensive. They're not. I mean, look at these prices. We're at 56. The 56 call that expires in 100 days is trading, let's see here, is trading at $3.60. And open interest is great and volume is fine too. The spreads are fine. So honestly, I like these options. I like even the 55 option. I like that one the best. So I would just spend $4. And if energy market moves higher, you're going to have a delta of about 0.80, which means for every dollar this moves, this 55 call is going to move about 80 cents. I'm serious. And again, this is not a swing trade. This is more of a position trade. And yes, we could go a little bit lower. We can go to the 53, 52 level. We may go to the 52 level before going back up. But I really like this trade. And I honestly think energy prices are going to go, much higher. But I think this index is going to go substantially higher. I think it can go up to the 62, maybe even higher. Let's look at a 5-year. Look at this thing, 79. That's actually what I'm thinking. I don't know if you heard Jeff Zananeri and me talking yesterday, but we both believe that energy has a lot to go. And I personally think this XLE can go all the way to the $80 level. We're breaking some major resistance right here. the next resistance is at 62. If we break 62, the next resistance is at 68. And then we have one at 80. So my profit target here is 80. And again, this is not a swing trade. This is a position trade. And again, we're looking at the calls that are expiring 100 days from now on 1/21, January 21st. And we're looking in the money. We're looking at the, right here, the 54 strike price, 54.21, whatever it is. It's got great open interest, or 55 actually looks really good. Yeah, the 55, sorry, 55. It's got great open interest, it's got good liquidity. The spreads are not even worth talking about. 418 last, it's a good position in my opinion. I don't have a crystal ball, but in my opinion, that's a good, really solid position. Now, I know we covered a lot of ground. Before I let you go, let me tell you something important and very timely. Wall Street just issued a warning. That's right. A top investment firm believes that market is waiting for what could potentially be a very big move. All right. Now, do you want to discover the $2.3 billion move that's bound to send shockwaves throughout the market, delivering overnight payday opportunities every single day? I certainly do. Well, you don't have to wait any longer. And I actually talked about Jeff earlier today. Jeff is hot. Joy of the trade, Jeff Zananeri, he's preparing for the biggest overnight turnaround of the 2000s. That's right. Jeff is in all the way. These opportunities, they don't come often. So join Jeff before it's too late. Get in on this now. Are you ready to learn more about overnight gains? No day trading. You buy at the end of the day, you get out the next day. Nice, good, solid overnight runs. Click the link below and learn more about it. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of this market by being the first to be notified when I post my next video. I know you guys want it. Get ready for it. We're going to have some big moves. Bond market looks a little iffy, but I think it's got a little more upside, and stocks are hot right now. And again, tomorrow we're going to talk about what to expect for next week, and we'll review this week, so don't miss out. And energy market, 55 call on XLE expires in 100 days. Position trade. You're going to have to take it easy on this one. I'm liking the put to call ratio. I'm liking the volatility. Who told you guys a month ago, 3 weeks ago, and 2 weeks ago that this market is going higher and there's not going to be a crash? I'll see you guys tomorrow. Bye. Give me feedback. Post some nice comments below this video. I'll see you soon. Bye.